Good morning, it's Harvey Jackson. We're just going to go through top news items here. We're definitely looking at a warming trends from our cold snap that we've had in the last little bit here. So let's get into it. First news that I kind of caught my eye was the Indian refiners are canceling palm orders, and you can see that actually happened as the market actually went to its highs that we saw a month and a half ago, and then pulled back, and now we're getting canceling orders again, and that's just called rationing of demand as prices go too high, and we're getting into that point of course as well, and the market's gone too high. The other thing I want to maybe point out here is this area that I have highlighted in green here. The market speculation India will raise its import duty, and import duty tariff, like let's just call it the same, but what they call a duty and Canada calls a duty as we try to move goods across from the US to Canada. Sometimes we get implemented with a duty, which is just a tariff. And I've talked about the reciprocal tariffs in the past, and I'll probably keep talking about them. We have tariffs on certain things that we import, which is just a tariff, right? It's a duty tariff. It's all the same thing. Anyway, Brazil first expanding soybean area may face challenges, and this Karen Braun put this out, and you can see, that there is a challenge to what could actually be more growth of soybeans in China. But I think the bigger overlaying factor is probably what we see here is the just a domestic product, or the GDP is actually decreasing and expected to continue to decrease. That's a problem, and the other problem I would say is just the big reliance of only getting product from one country as well. 70% of all Brazilian soybeans come from Brazil to go to China, and we know how that works. Just in the crude oil for us from Western Canada going to the U.S. That reliance really gets into question whether we should have that kind of a scenario happen. You want equal trade partners, and I would even say, and maybe this is probably going to get some light, a crush number of 13 to 14 million metric tons of a product that we only produce, let's call it 19 million on average. That actually starts to be very dependent on our domestic as well. So you could run into problems. We need an export market as well for all that product, rather than just a processed as well. So anyway, we'll move on. USDA is releasing some of the frozen funds, but it's just to note here that there's what I got highlighted here. Trump administration has said that the funding for programs helping farmers will not be affected, but the next sentence is actually said it's already affected some of the just the delay. But you got to remember, he's only been in for a short period of time, frozen funds for a short period of time. Just how long does it actually get back into the farmer's hands if it was stalled just on day one? I do not know. I thought I'd just throw this in. I was talking to a prospector yesterday, and just highlighted the where we are in the growing season, or the selling season, depending on which one we want to look at. I got canola at the top on both of these, so you could say that we're in this area here. Generally, there's an increase going into that spring summer months. Same thing on this one on the canola, and then if we look at this on Minneapolis wheat, same kind of scenario. And if you're looking at this on the corn, same kind of scenario as well. Generally, and you're seeing some relatively good strength in all three of those commodities. So just keep that in mind, that maybe the seasonality is a little bit early, but I'm going to say that there's probably still some more room for this upside as well. U.S. dollar has been stumbling a little bit, and that's actually been helping some of the commodity values. Euro gains, Japanese yen, a whole pile is actually starting to see a little bit of strength against the U.S., and some of it's just as it says in the title, tariff fatigue. And I think we all got brain fog from all the, what's been talked about in the last 3 weeks. We're kind of done with it all, I'm sure, but it's going to be here for 4 years. So just keep that in mind as well. Brent crude seemed pretty steady. And there's lots of things going on here. Negotiations in Ukraine. OPEC is yet to decide on their output. And all these things could actually be inflationary if they were to try to push the barrel price and the West Texas up in price as well. So that's not what we're looking for at all. Here's the title of the presentation is actually a warming trend. You can see that we're going to have a deepening warmer trend. The one caution I will have is if we actually break dormancy and then we snap back to get some of this cold weather back into this area, however the flow might end up happening. If we get this warm trend, we get growth happening, and then we get a cold snap, that is when you get winter kill. It's not so much when you get winter kill when you got snow cover that I showed yesterday. It is when you warm up, start growing, because you can't kill a plant that's not living or growing, but you can kill a plant that started to grow for sure. So anyway, so let's have a look at. You can see that there's cold over here in Russia, Ukraine. You got some heat building up in Argentina, and then you got this warming trend that we've got in North America as well. And what does that look like? Is that going to cold is going to flow back into Canada? I would take a guess that we're just too early not to have any more cold weather. That's for sure. Moisture is actually following in the Argentina area in the next 10 days, which is going to help a lot. And I think there's the need for some dryness in the eastern seaboard as well on the U.S. Side. They've been flooding, getting excess rain, so it's maybe about time that they dry out. And you can also see a dryness here in Brazil that's going to give some more amplitude to get a little bit more soybean harvest as well. So if we look at the seasonal 3-month, and again, these things are going to be shifting all the time, but you say, seasonal temperature, it's going to be above normal, way south, a little bit below, maybe reaching into Saskatchewan and Alberta if we were to try to, extrapolate that up with the CPC look here, below moisture and normal moisture up here, but we'll have to see if that can play out as well. Here's the Great Lakes ice cover, and I think I showed this a week ago, and it was below. Now we're above the 5-year or the historical average. I would expect we could even get into that kind of range as we're still in that uptrend here, and if we get some more cold weather, we could actually see this still increase. So it might take a little longer to get that ice off of the Great Lakes than we've seen the last couple of years. Drought monitor, really nothing to talk about here. There is drought, but drought when there's no crops growing usually doesn't affect it. So just dismiss it basically. But canola is down $3 to $4. Rapeseed is up a little wee bit. Soybean oil is just down a little wee bit here. Palm oil is still up on the trade. Crude oil at 72, and I talked about the Brent, which is always holds a little bit of a premium. That's in European crude oil by the barrel. It's a little bit higher usually. Soybeans basically flat, and the spring wheat is up a little wee bit, and your wheats are all up as well. Canadian dollar slightly down. Here's just a heat map, basically, or futures map. You can see the currencies are just which ones are the bigger movers, energies. It's just a cool way to look at maps, the overall maps. It has grains on average, basically flat. And livestock, basically flat there as well at the moment. So let's have a look at the canola. We've got still pushing well above in the oversold kind of a position, but still at the top end of this channel. So as long as it stays at the top end of that channel, and we get above this 78.6 retracement value, and I think we're golden. I think that's a good thing for farmers. For sure. And if we're looking at pricing, you always want to price at the top end of these channels. November canola broke through this longer term trend. It's above. Now we're looking at full retracement back to these values here. Not quite to there yet, but would be looking for that as a sell opportunity as well, as it is right now. European rapeseed price in Canadian dollars. It's gained a little bit of strength, I guess. So it's still holding a $117 premium over Canadian canola. And that's a bit of a gain. Soybean oil has been a little bit of an increase here. You can see that it's actually increasing, and it's above that last leg of the current retracement. And this is when it gets most volatile, is when you're in these areas. It doesn't want to stay there very long, and we're looking for it to try to get to the top end of that retracement value to get to full retracement. Palm oil. As I mentioned earlier, it's actually discouraging India being the largest buyer of palm oil for processing. It's discouraging them to buy and encouraging them to buy soybean oil. So palm oil is getting too expensive versus soybean oil, and that's pretty well known. And the same thing with the canola. The canola is underpriced versus the other qualities of oils in the world as well. Soybeans been chopping around on this little bit of an up and down here, but it looks like it's going to try to test that 78.6 retracement value. Canadian dollar wavering above that line, but don't know how long it's going to hold there. Let's have a look at wheat. Wheat, like I've been mentioning, it's got this nice little curve, a few days down, but you see that multiple times. You have to have some down days. But the other thing is we're getting towards the end of the month here as well, and there's going to be some moving of options and contracts out as well to go to the May. Spring wheat for new crop, we're getting closer to my upside target of $7. Still keep an eye on that because we've got a pretty good uptrend. we'll see if we can get there. And I would keep those futures first kind of contracts in play at that value. Hard red wheat, same idea. It's got these little pullbacks, but it's still in a strong uptrend. We'll see if we can keep going. New crop, we're nowhere close to the last June, May highs, but you can see that we got to the 50% retracement value, which is exactly where it was back in October. And the same thing when we look at the 50% retracement value, and then we just look at our September to now retracement, we're at the 50% again, or getting close to it in 61.8. Where it got into, it did not get above the 78.6, where there's more volatility and more chance that it can actually break through. Milling wheat, kind of chopping sideways here. Here's your May corn. We peaked above it. Now we're kind of pulling back a little bit. Again, options are expiring on these March contracts, and it could be pressuring the corn as well when I'm looking at the May here. Here's just your corn ratio. We've got the soybean to corn ratio, and it's definitely favoring soybeans here, or corn, as the market is going down. And here you're favoring soys as the market's the ratio between the corn or the soybean and the corn price. And that's all I have for you today.